Welcome back. You're watching us here on Chartbusters. As promised, let's get straight to the conversation that we've lined up for you with the management of RailTel Corporation. There's been a spate of order wins. In fact, in the month of March itself, on 4th March, they got about 89 crore worth orders, close to 250 crores worth between 14th and 16th. 17th, they got about 350 crores, and just as we speak, another 99 crore order coming in as well. Mr. Sanjai Kumar, who's the managing director, joins in now. Thanks a lot, Mr. Kumar, for joining in. If you could, with all these orders that you've gotten, give us an updated order book number, and at the same time speak about order inflows that you are expecting in this financial year itself, because post, in the first quarter of next year, we will have the elections.
So very good morning. So actually, as you rightly said, that March we have clocked a very good number of orders. So that with that, we are now completing around 1,250 crores orders in this quarter itself. And the total order book today stands at around 4,900 crores worth value. So that is what I want to say about. Yeah.
And how much is remaining in the next 10 days, because the year is still not over?
That is, see, these are all bid-based orders. So we are participating in tenders, the results are declared, we get the orders. So it's not good to speculate anything, but yes, we have participated in a good number of tenders. We have started momentum and gaining momentum, and this will continue with this momentum next year also. So I can't say this number. Exactly. Yeah.
All right, Mr. Kumar, first of all, congratulations on this spate of order wins, and order book closer to around 5,000 crores odd. It sets you up well for the next year. So give us a few details. For this year, I think you had guided that the revenue growth will be around 25%. Are you set to beat that, or will you be meeting that target for this year? And for the next year, if you could tell us, what is the execution plan on whatever you deliver in FY24? What kind of growth can you give us, and split it up between your two businesses, the project as well as telecom business?
Yeah. So first of all, thank you very much for this compliment. Out of this order book, we expect that about maybe close to 40% of this order book is likely to be converted into revenue next year, which will be our endeavor, and we'll be getting new orders also continuously. As far as the growth guidance, so we will certainly make our best efforts to exceed the current growth guidance, and we are sure that we'll achieve that.
Now, FY25 revenue growth will be how much in comparison to FY24?
So we'll keep the growth guidance certainly more than this.
So more than 25%, more than 25% for next year.
25% is going to be there, yeah. It'll
okay. All right. And the split between your projects and telecom business, and I ask you this because it has an impact on margins, right? The project business has a lot more competition, so that's why the margins are in single digit.
See, telecom sector certainly is going to be smaller proportion out of the total kitty, and project business is going to grow because of digitalization drive going throughout the country. And post-election also, new government is going to come, and then certainly this momentum is going to go even faster.
Okay, so if you could then give us a sense, Mr. Kumar, of two things. One, the kind of order inflow that you can guide us for FY25. First quarter, like we said, would be muted because, there would be the election activity that would happen. It's only post the new government comes in where order activity will perhaps pick up. So what's the kind of order inflow that you're targeting next year? And because it will be dominated by projects, what's the kind of margin target that you have for the next year?
So margin guidance, see, first of all, let me answer your first question. Next year, if we talk of, so this year, we clocked around 2,800 to 2,900 crores of total new order business. And I'm sure the kind of momentum our team, basically the enthusiasm they have, I'm sure that we'll be surpassing this number, and our efforts will be Certainly there we'll make every effort not to lose a single order, and the growth momentum, getting new orders will certainly much better, much higher.
Okay. And what about margins, sir? Will it be
So
in this
margins
vicinity
for-
of 17 to 18%?
See, margins for projects will again be the same range, 6 to 7% in projects. So certainly overall EBIT margin or EBITDA margin, if you talk of, there will be a pressure, but absolute growth, yes, going to be there. And I'm
So
sure
we should
that
work with. So Mr. Kumar, since apologies for coming in here, but since your project business will contribute more, safe to say margins will come down. But they'll come down to what extent? The blended margins should hold at around 15%?
if you're talking of EBIT,
EBITDA
No.
margins.
EBITDA margin will certainly be, I think it should be around 17%, 16 to 17%. Better
All right,
than
16 to 7.
Yeah, should be.
Because, in the peak, they've been upwards of 23% as well, come down to around 19, 20%, can go
Yes.
further lower to 16 to 17%. We understand that's a business call that you've made with a shift more towards the projects business itself. But, what would keep you standing or give you a competitive edge is if you receive money faster than your peers as well. So what do the receivable days currently stand at, and what typically is the working capital cycle for the project business?
See, if we talk of receivables, so since our government, most of the customers are government, there are challenges in getting the revenues in collections. But recently, during last 2 quarters, we have seen that we have made good efforts, and then receivables have also improved. But the overall scenario, if we take, because our revenues are growing, so debtors will also grow. So then we hope that we'll continue to be in the range of 150 to 170 days.
150 to 170 days, that's almost half a year, Mr. Kumar.
Yes.
Is there any way to bring that down?
But if you take out of the clear picture about it, that many projects we get advance money, so cash flows are not affected, number one. Number two, we are working with partners. See, so the net outgo from the company, basically net debtors, if we talk of, is generally not that high. But so the net payables
Yes.
from our company is not that high, and receivables, because of we have to pay to our partners also, they are back-to-back partners. That is why our cash flows are not affected. That's what I want to say.
So what will be the cash conversion cycle then, if you were to put it in a number of days?
I think it will be around 90 days.
90 days is a cash, so around 6 months, around 3 months odd.
Yes.
Yeah. Final question before we let you go. There was a rating upgrade that came in for you, for the company, but you're a net cash company. How does it change things?
As of now, no, but yeah, we are considering this option, and we might go for leveraging this position maybe next year. So we are still working on it, but yes, still we have not used it.
I presume you would be leveraging this position largely for working capital, given the 90-day cash conversion cycle that you have, or are you also looking for some long-term debt for capex?
No, not exactly for the working capital requirement, but maybe we take some projects which require some leveraging, and there we can, so we can go project basis, based on project, specific projects.
All right, take that point. Thanks a lot, Mr. Kumar, for joining in and giving us all those details. Order book nearly 4,900 crores next year. The revenues would be upwards of 20% as well, with a larger proportion coming in from projects. 16 to 17% margins is what you're guiding for. Thank you for joining in. Wish you good luck for the next financial year. With that, we'll step into a short break, come back, get you more on the markets and a lot of individual stocks.